the time theory is definitely something that a lot of people that trade Ichimoku do not know about. They
Mm.
know the just the basics. When I say basics, I'm talking about like super basics of Ichimoku. I'm talking about like the Kumo breakout, the Kumo bounce, Kijun bounce, and the break. But they don't know about the advanced time theory or the observation theory or the wave theory, which is the three components of Ichimoku. And Ichimoku is actually a time system, and it's not an indicator. At least according to the Japanese, it's not an indicator. It's a system, and it's a cycle system that they use. So I will go into just the basics of the time theory, not nothing too overwhelming, because if I do that, then y'all are gonna be like, oh man. But I want y'all to go ahead. I want to go ahead and put it down on the chart real quick. Let me do this. Where is it at? Right here. All right, so I'm starting from this high point. So I usually, when I use it, I always look for the highest fractal, go from that point, and then I have my targets or the target dates already made right there. If you see on day 33, the market decided to reverse around that area because it was in a cloud. And Jay, you would have got into this trade very easily. You know why? Because this is your favorite pattern right here. Well, one of your favorite patterns.
Yeah.
But yeah, you could have easily got that, and it landed right on day 33. So you could have put definitely right when it got up to this high point, you could have put your sell in and took that market over. But
Mm-hmm.
the way you use the time theory, you usually want to use the time fib tool, and I'll show you guys over here. It's called the fib time zone tool. So if you guys don't have the numbers already, I'm gonna go ahead and let y'all get these numbers down right in here. All right, I'm about to explain these numbers in a second. So go ahead and take a screenshot of it or a picture. I said screenshot, a picture of it, or write them down, whatever you want to do. Let me know when y'all are done so I could move on.
Okay, so I'm looking for that tool.
Right.
Is okay. Like I see times. It doesn't. I see something that says time cycles. Is that it? It doesn't say fib time cycle.
No. It should say fib time zone.
I mean, okay. Oh, sorry. Fib time zone.
Mm-hmm.
Where is that? I'm in Trading View and I don't see it.
Really now? That's interesting. Let me go back here. So it should be right under fib speed resistance fan. Right
Okay.
under. Yeah, check in there. But yeah, if y'all haven't got these numbers down, write them down, or at least take a picture of them. And when you're finished, let me know so I could move on. Did you find it yet?
Yes, I did.
Awesome. I go definitely take a picture of this, or write these numbers down, and then we'll move on to the next. And I'll explain these numbers in a second. There's really only three numbers that you need to memorize. All the other numbers you don't really need to, but it does help to just know them, just in case, because it does help you with understanding the cycle. All right, so I'm gonna go ahead and move on to the next phase. I'm gonna explain these numbers. So these numbers, We call then in Japanese they are called Kihon Suchi, which just simply translates to numerical value. So what these numbers represent, it represents the day, or Hinkabi, meaning day of change. So you could do, you see how we have 9, 17, 26, 33, 42, 51. So when you see these numbers, it doesn't just mean only 9, 17, 26, 33. What you could do, 9 minus 1, which will give you 8, or 9 plus 1, which will give you 10. So you could do that for all these numbers. So you could do plus 1 or minus 1 for each day that's given. So right here on day 8, the market dropped. And then on day 9, the market reversed to the upside. And then on day 17, the market dropped. What these numbers are saying, is showing you where the market could potentially reverse, accelerate, or extend itself. And by reversing, you see here on let's go to day 9, the market reversed. All right. On day 17, the market reversed. On day 26, the market ended up accelerating to the upside. It was the start of the acceleration. And then here on day 33, the market reversed, and it went to the downside. So when you see these numbers, or when you see when it lands on these numbers, that's where you want to look for your trading opportunities. So you could plan in advance for the market move. All right. So notice our next number coming up will be day 44 here. But this is why, this is what I do when I use the time theory. I don't necessarily use this tool at all. What I do, I take this off. I just memorized 3 numbers. I just memorized 9, 17, and 26. All right. So this is what I do. All right. So I've just moved it out here. I use the date tool, have it mark up 9 bars to represent 9 days. And y'all are probably asking, can you use this strategy on any time frame? No, you could only use this strategy on the daily time frame, just to let you guys know. All right. So here's day 9. I'm gonna extend this one out. Let's go to 17 right there. And then I'm gonna extend it out one more time to 26. So I have my trading days prepared in advance. So I know what days I'm gonna be trading when I look at this. So what I do when I mark my days, I make it red to show me that that's the day of change, or Hinkabi. Go right there. Now all my days are set up now. Now the next thing I want to do when I do this, all right, I want to identify my levels of support and resistance. All right. And then also see if there's any pattern that goes along here as well. Because if there's no pattern, then then there's nothing for me to really look for. So I marked up my high, the weekly high, the daily high, and the daily low, the highest price and the lowest price at the last 26 periods. And here I see that prices ranging between 9,800, 98, 96, and then 11,195. So I know prices ranging in between here. So when I'm looking for a potential target, and actually you want to mark up a little bit more than this too, like right about here. This is a good spot. So right here is a pretty good spot as well, because this was prices holding above this range as well. So now we have 3 levels to look at. So I do know when I'm looking at this, according to observation theory, it lets me see where the next day, of change, which will be the 25th. All right. So I know this is going to be the case. This is where my targets will be. All right. My targets will be price moving to the upside here, back to 11,000, or price will be moving to the downside right here at 9,896. So this is what the observation theory is doing for me. Now, this is where we take it a step further, all right? So now we have, potential targets in mind. So what we want to do now, we want to go to the smaller time frames and identify if there's any waves, like the N wave, the P wave, or the I wave, or just see what's going on there. Or we want to identify if the market is making any type of pattern that we could use, like a M pattern or W. So let's go down to the lower time frame, see what's going on here. So now what we could do, we could take the cloud off and just observe how the market's moving. So when we're looking here, do y'all see any pattern at all? Anything that y'all remember in y'all's trading, or any pattern that y'all see here right now? Do y'all see anything? Don't be shy. I'm not gonna judge y'all. Do y'all see any pattern on the chart? Just looking at it.
The N wave.
Where you see the N wave? You want to
How it
drop?
goes up and how it's going up, and it retests at that line at 10,325 and then goes back up.
You want to draw it? I'll let you draw it and let me see what you see.
Okay.
Oh, you don't have a. You're not on your phone. I mean, on your computer, are you?
No, I can be though. Did that help? Can you see it?
Yeah. Okay. That. Wow. Okay. So that is accurate right here. Yes, that's accurate. But we're talking about right here where current price is at. So if you're gonna do that, which is not wrong, I suggest you do this. I don't know whose music that is, but right here, you could do this as well, and that could be the potential N wave. Now, this is the rules for the N wave, because a lot of people get confused about this, and this is why I had a hard time learning this, because I didn't ask the right questions about the N wave. So I'm gonna fix that for y'all now. You could literally start the N wave from any point. That's one thing I didn't know. You could literally start your N wave right here if you wanted to. And I'm gonna show you what I mean by that. So if here, let's say the market went up, all right. Let's say we didn't know about this right now, and we just saw where this current candle was. So we could actually put our N wave right here, right? And you see here it went up. So this is what happens when it's an N wave. Jay, I know you know some of the basics of the N wave, so I'm gonna have you explain this part. I just want you to explain what happened at this B level and what happens here. All right. So Jay, if you don't mind, go ahead.
Hey, I heard you. I'm gonna need you to run that question back by me again. I just sat back down.
All right, bet. I was gonna say, explain this N wave. Why it wasn't? Well, why did it end up being an N wave after all? Explain what happened at the B level, because I know you understand the N wave, especially because you showed me that N wave you drew on your chart. That was a nice, beautiful one too. But explain why this was a failure right here at this B level.
Uh, um, it didn't go past D level, so yes, it's still an N wave, but it wasn't a, I guess you could say, a successful one for a trader. If it don't go past B level, then I forget the terminology I should be using right now, but basically you should get out the trade.
Right. That's 100% true. And yes, so when price fails to break above B, what happens is this is how people this is how you could get into find another trade opportunity. So here, this is B, this is
Finish.
C, this is A. You were about to say something?
No, I'm talking to my daughter.
Oh, okay. So when price went try to move up, it tried to make that N wave here, but it failed at B. So remember this and write this in your notes if you are writing notes. If price fails to break the B level, what ends up happening, it turns into a double top. You see that? Right there, it turns into either a double top, it
Yeah.
either ranges and just will range between here, because you see it did range in here a little bit and then it dropped. Or what will happen, it'll turn into a triangle or a P wave. So you could draw this out too, depending on, you see price fell to get above. It got above a little bit, but the next candle was, it ended up making a tweezer top, and then price dropped here. So it's all about identifying and knowing how the wave theory works as well. So now let me actually do this because I should have actually done this. So let me make this visible on the 4-hour chart so we could get a better look at this market. Yeah, if you're gonna make the use the the time theory, make sure you have your your time days marked on the chart so you can see it on the lower time frame. So we know this is our next day, which is the 25th, the starting right here. All right. So we do know price can move up to here, make an I wave, or price can move down here, make a somewhat of an N wave. Let me show y'all real quick. So if we're gonna measure that out, let me show you guys. Where is my tool? Here we go. So from this point to down here to right in here. If price stays at this level, this will be a N wave to the downside. You see how it lines up right here?
Mm-hmm.
That would be the N wave right there. And it's right there. So if you did take that trade, this is where you're going to be looking for that trading opportunity. You would actually want to probably go down to the 1 hour just to confirm it, just because on the 4 hour, it's not a lot of information. And by the time that 4 hour moves, you're already missing like 90% of the trade anyway. So you might want to look for the opportunity on the 1 hour on this trade here. But let's say it does move to the downside and make an N wave to the downside right here, right? All right, so let's do that. We'll see. Let's see that 1-to-1 ratio, which is the N level from there to there. That's a 6% move, and then it's 635 pips on Bitcoin. And y'all know Bitcoin is quite a 600 pips on Bitcoin is like a lot. So what we will do here, let's actually go to the 1 hour chart and observe this. So on the 1 hour chart, it looks a little bit different. All right. So here on the 1 hour chart, there actually is a wave right here. I wasn't gonna draw it, but I'm gonna draw it for you guys this time. So right here. So this is called a P wave. A P wave is simply just a triangle formation or triangle pattern. It's nothing special. It just means in Japanese, they just keep it simple. They don't like all these fancy terminology. They just say P wave done, N wave done. In America, we call it like ascending triangles, descending triangles, wedges. We have all these intricate names. They keep it simple. It's just P wave done. If you see a triangle, simply call it a P wave. You're done. All right. So here, this is how you would trade this. All right. There's two ways you could trade this. You could trade the breakout. All right. Because if this is the B level. All right. Let me mark this up for you guys. Actually, let me do this. Where's my writing tool at? All right, right here. So starting at this point, because this you could choose, you could start at this point if you want to. But the reason why I don't choose that, I choose the where the market made a uh, correction, because you see how the market came down, made an impulsive move, correction, impulsive move, a correction, and then a major impulsive move. So that's what I do it on this one right here. All right. So that's what I was looking for. Now, when it comes to, taking the actual move, let's see. Let me draw this up for you guys. Where we at? So right here, A, the B, and C will be right here. So price would need to break the B level. It definitely has to break the P waves to get underneath. But right when it breaks this B level, that's when you have your target somewhere down in here. Now, here's another thing. Your B level is your first TP. All right. It might not be a lot, but it is your first take profit level. All right. So this is how we would draw it up from here to B to C right in here. All right. So you see where it takes us as far as our take profit area. Let me actually get rid of these. All right. So now let me rewrite these for you guys so y'all could see this. So we have A, B, C, and D is always going to be that 1-to-1, which equals the AB. So A to B equals the movement to C to D. And if I draw this in, you could see that N wave right there. So that's how you get to D. But this is your first take profit. It might not be a lot to you, but it's still something. Second take profit will be right here. This is the NT. This is N. This is V. And this is the E level. All right. So write these down. The NT, the N, the V, the E. Write these down. So that 1-to-1 is in, just above that is NT, below that is the V, and then all the way down here is the E wave level. All right. So definitely write those down. Let me know when you are done writing them down so I could move on. Because y'all don't want to miss this. This is some juicy stuff. Sweet, sweet. All right. All right, I'm going to go ahead and move on. Let me go ahead and clear that. And I'm recording this, so if y'all miss it, then y'all could go back to it as well. So I got it recorded for y'all. So right now, it's just a waiting game. When you see the N wave, the N wave and a P wave within the N wave, when you see this, you mainly want to wait for the breakout unless you're very confident in the move going in your favor, because you never know what's going to happen here. It could come down here and then spike up, and that'll still be considered a false breakout because it'll close back inside the P wave. So that's why you got to be careful and wait for a clean breakout, and usually wait for 2 candles, because once you see the break here, then that's when you know, okay, yeah, it has a better chance of moving to these lower levels. Now let's throw on Ichimoku now. Now we're gonna get a better look at this market. Now we're gonna use a little more observation here with the clouds. So right off the rip, what can someone tell me with this chart? Just looking at the clouds. I take everything off. Just looking at the clouds, what is this telling us right now? Just looking here.
It's consolidating
Yep. Why is it consolidating? Just off of first glance.
because the direction that the cloud is going in. Look at both of the lines are going straight.
Right. So perfect. So here, if you want to identify real quick, like the one thing that you could look at is Siku span B, right? Because this is flat. If this is flat, this is usually saying that the market's flat. Another thing, if you want to see that, is if the green line, or I don't know if y'all's line is green, but mine is green, but everybody has their colors different. If you see Chiku span moving inside here, that also means consolidation until it's like underneath here, then that means the market's moving again. Also, Siku span A is flat as well. It's not angling down, showing that the market has momentum. So that's another reason. And then Kijun and Tinkerson are flat. So Sarah, that's correct. Everything is flat here. So this means do not trade yet. So if I put everything back on, it's saying that the market is waiting here to make its move. So you could trade it like this when it breaks outside the P wave. Make sure you get 2 bullish candles, take that trade up. If you get 2 bearish candles underneath here, take that trade to the downside, and you already have your targets here. Now, if it's just one giant candle, well, you might have to just miss that trade then. But you could be aggressive. Like right now, this is where you would be aggressive because you got this bearish engulfing candle right here. It's engulfing this candle here. So this could potentially be a move to signal to the downside. Now, another thing, let's go back. There is some bearish divergence here. All right. So I'm going to go over a little bit over divergence, just a little bit, not too much. So this is hidden bearish divergence. You see that the market here, it's moving flat. It's not really going higher than this because it hasn't broke this high yet. So this is showing us that there is bearish divergence here. So a way to play this and be, pretty strategic about it with the RCI as well, even though we don't have all the confirmations on the RCI, we know that the main trend is bearish. We know that the midterm trend is pointing down, and it looks like it wants to dip below 0. So what you could do to be aggressive for this move is wait till the red line, the signal line, crosses below 0, or say if it goes higher, if it comes up above positive 80 and dips underneath, that's when you'll want to look for your short. All right. Let's see. Then going back.
How's everybody doing?
To the 15. What's up, Bert?
Ain't that too, bro?
Gotcha.
What up, Bert?
We're hood.
Let's see.
How you doing, Miss Jacqueline?
I'm good. How are you?
Blessed and high in the favor.
Yes.
Ladies. Yeah.
We know Big Bert's always balling. Let's see. So right here, let me go over this real quick. Oh, yeah, there's no divergence here. Yeah, there's no, unless you want to start from way back here, then yeah, there is. But it's still bearish. All right. Now, this is crypto, so this could change in like the next 4 hours. we know this is crypto. So what we could do here, because price is still saying don't enter this trade just yet. If you want to enter this trade on the 15, this is how you do it. I'm gonna show you, because this is actually a good opportunity to wait for everybody to trade this. Whether it goes bullish or bearish, that's up to the market. But you want to wait for the full confirmation. Where's that? Oh, here we go. So if we do go bullish, let's say it happens like this. We get a candle here and then a candle here. So we had the breakout, that's one. And we have this right here too. Chiku span is going to be right about here. Somewhere right there, because it's 26 candles behind. So it'll be right about here, copying the price. So if you get this, you better buy. Because what's going to happen, Kijun and the Tinkerson are going to be angling up like this. something like that. So that's what I would look for here. But if you don't have the patience, then you might as well not trade that. Now here, same thing for the downside. If it goes underneath here, 1, 2, Chiku span will be about right here. Boom. Now the last thing you would have to worry about is this, because this is how people get got in the crypto space. And I'm gonna show you a little secret that they be doing in these crypto markets that gets a lot of people thrown off. All right. So remember, actually, it's not really a secret, but remember how on the 1 hour here, this is the B level. So let's actually make this red. Let me make this visible on the 15-minute chart. All right. So let's go back down to the 15. So let's see, this to make sure everybody is learning this. I'm gonna pick, I know Jay, you know this, you just answered it. Sarah, what is this red line right here?
Oh,
I don't know.
All right, let me rephrase that. So this is the P wave, right?
Mhm.
All right. So
Oh,
from here to here to this point, actually, let me do this. I think this will make it more visually learning. Let me see, right there. All right, so going back. So what is this point right here?
a B point.
Right. So now that we're looking at it here, if price breaks through here, comes down, this is where you, if you're trading on the 15-minute chart, now you have 2 levels of take profit. All right. Now let me show you why. Your first level of take profit, and this is why people get got in the crypto market, because crypto market is slick. There's this level right here called a zone, right in here, that will get people. So price could easily break this P wave, come right down here. Doesn't even make it to the B level. You'll get caught right there, and then caught right in here, and then the market will probably rally back up. That's something that people always miss out on these lower time frames, because especially in crypto, because a lot of times the market wants to move a certain amount of a certain amount of percent, because just here to here, that's 1%, and that's already 135 pips right there, and this is the 15-minute chart. But if we go all the way down here, that's 1.79% with 189 with 184 pips there, which is at that B level. So if we do now have 2 levels of taking profit. So you always got to watch these breakouts as well. All right. So make sure you mark your zones and you mark your wave, the letters of the wave here. And then if it breaks, the P wave, and it comes all the way down in here, then you're balling. You're straight. Like the highest amount of pips right there, you make an 8% return with 782 pips on Bitcoin. So this is what the type of moves that we look for when we identify P waves. All right. So that's why I strictly trade these most of the time. I don't trade anything else. They don't happen, a lot, but when they do, the probability is much, much higher in your favor. Let's see. So is everybody understanding this so far? Is it
Yes.
making perfect? I'm glad it is. So I want to go over the type of waves, because this is another thing that's gets this is the part that kind of messes everybody up as well. The N wave is probably the most recognizable, the N wave and the I wave. But the I wave, you don't really know when an I wave is going to happen. That's the thing. You could see an N wave, but you don't know when an I wave is going to happen. And just like, so an I wave is pretty much a point to point. It's not necessarily, it looks like an eye, it's just a point to point. So from this point up here, and I'm gonna highlight it. So from this point right here, I'm use this one to this point right here, could be considered a I wave. So from here to here is a I wave. All right. And if I zoom out or move everything out the way, y'all could see, let me take off the cloud for a second so y'all could see it. Y'all see how this made an I wave? It's just a straight line down. You don't know how long or if or when the I wave is going to form. You just know it's going to happen eventually. And if you catch one of these, it's going to be the same length. Let me go ahead and draw this as this move here, which will give you that end level. So y'all see how this is working? You got I wave here, then I wave. And I wave doesn't necessarily mean that it has to go straight down. It could like curve a little bit and go straight down like this. So it could literally be something like from this point to down in this way. But as long as it still equals the amount of A to B, then that's still considered an I wave. All right. Hope that makes sense to y'all. Let's see. Let's go back here. Let's go ahead and delete that. Let's go ahead and delete this. Any questions? All right, sweet. Good, good, good. I'm glad it makes sense. All right, so here, I want to, so the first wave, the most basic wave is the I wave. The next wave is the V wave. Now, a V wave is not easy to spot if you don't know what you're looking for, but a V wave is just the, so everybody knows this. If you have a impulsive move, let's say this is a impulsive move that's bearish, right? All right. What's the next move that's going to happen after a impulsive move? What happens after an impulsive move? Anybody?
Retracement.
Right, a retracement. The retracement is simply just a V wave. All right. So you got a V wave right here. This is what a V wave typically looks like. Now, a V wave could be like anything. A V wave could literally be this. A V wave could literally be this. And it could literally be this. Don't get caught up on the name of it. Get caught up on what it's actually does. All right. So let me show you a V wave because they're pretty easy to spot. So right here, coming down, right here is a V wave. From this, that's ugly. But anyway, from here to here, that's a V wave. And then notice here, if we were continuing to the downside, because remember, this is the B level. You see here how it came down and it got rejected here. So you can, from here, so let's say this is A, this is B, and then look here, it came back down again. Look, this is C, but look, it got rejected here. And if we could say this is A too, look, so A, let's do this. Let me do this first. So it came down A to B, C came down here, got rejected at B, and then look what happened. Since it got rejected at B, look what it did. It ended up consolidating, making a P wave. So whenever whenever price fails to break B, it consolidates or ranges or whatever it decides to do. Sometimes it reverses. But whenever it does that, you know that the market's either going to move move higher based off that bounce. So get this here, the V wave. Here, we got another V wave from here. So we got A, B, C. So from here to here, this is a V wave right here. So we failed to do that. So the market's just going to make constant V waves and V waves within this formation. All right. So that's how you trade that. All right. So let's see. Let me go ahead and see. All right. So since we got that, pretty much marked, let's see. Any questions so far? Anybody? So we covered the I wave, the N wave, and the V wave. I'm going to cover the Y wave here in a second. I just need to find one because they're not easy to spot. Y waves are almost impossible to find, or they're not impossible to trade. It's just they're hard to find, and Y waves are the hardest things to trade, no matter how good of a trader you are. Let me see. Is this a Y wave here? No, that's not. That's more of a P wave there. Give me a moment. It takes a while to find one of these, and it's got to be harder even on the 15-minute chart. Let me go back out here. Let's see. Is this a Y wave here? Yeah, you could almost count this as a Y wave. I need to see how it closed on the 4-hour chart, or what this looks like on the 4-hour chart. Give me a moment, because depending on what this looks like on the 4-hour chart, I might could claim that. Let's see. I wouldn't call, yeah, you could call that a Y wave right there. So this is what a Y wave would look like. So it's not the easiest pattern to spot. It's very, you won't know it's a Y wave until probably like the midpoint, like right in here. So this is why a lot of people get jacked up in the market, because Y waves happen out of nowhere. So this is what you want to avoid in the market. But a Y wave is simply an alligator's mouth. It starts off, consolidated, and it starts expanding out like this. And then it breaks either up or breaks to the downside, depending on what, the market's doing here. But how you want to trade the Y wave, you want to wait for the breakout. Yeah, trading inside is pretty risky. The reason if you're going to trade inside the Y wave, I suggest you only trade at the tops and bottoms. And you see here it broke out, came to retest, bounced, came to retest, then broke back in. So yeah, Y waves, this was a huge fake out right here. This is where everybody would have got with this one. When you see a Y wave, be careful. Be extremely careful. I'm just going to say that because these are not easy at all to trade. Let me show y'all. So see where this red bubble is? So if we're looking at, let's go ahead and clear that. We're going to focus on this area right in here, because this was literally the legit breakout or the move to the downside. So right here, mark this on the hour time frame. So we see that the RCI is saying that we're bullish, correct? Now, that's cool enough. So let's look at the Ichimoku now. So Ichimoku is saying we're still bullish. Besides this right here, we're bullish. But let's go to the 1 hour. Let's see what the 1 hour is saying here. All right, so you see that now we have the Y wave here on the 1 hour. Let's see why the market did what it did. Let's zoom out a little bit. All right, here we go. So here we have, you know, this was the area where the Y wave broke out. We had a bearish TK cross right here. All right, not just that. At that bearish TK cross, the RCI right here, make sure y'all look at this. RCI right in here showed us that we are bearish as well. Not just only that, we got bearish signal here, bearish signal here. That's two. Once Chiku span broke free, you better have taken that trade, despite what the RCI was saying on the 4-hour chart. Sometimes you could use the RCI for one chart, which is fine, which is a harder method to use, but you just got to know when to use it. But look here. This drop right here at the breakout was a 17% return. That's 1,700 pip drop right there. So this is why I look for Y waves. I look for waves because I know when it breaks out a Y wave, especially Y waves, but if you find a Y wave and you trade it correctly, you're going to make, you know, your week, your monthly salary or the next 2 months, depending on the lot size you use. Let me show you another example of a Y wave because I have another Y wave drawn up on the what's it? Yeah, S&P 500 right here. So this is one I drew up a long time ago, and it just now, you know, it almost actually hit my target right in here, but it actually went from this point all the way up to close to here. So from this N wave down in here, from this point to this point, actually I have that drawn so ugly. Hold on, let me fix that. Don't know why it's so drawn ugly here. Should actually be right there, and this should be moved right here. This should be moved right here. But anyway, so from that move, from this point to this point to this point on the Y wave, and you see why I say trade the bottoms of the Y wave? If we zoom in here, let's go ahead and take off the cloud so y'all can see, but look how it is in here. We even had an N wave in here too. But you see how this meshed up? You got all these waves within a wave. But you see how this meshed up? This is why you take the bottom of those Y waves. Take that trade as long as you can from the bottom. From here to here. If you had held that trade all the way up to its third target, actually hit all targets. I just saw seen that. So right in here, hit that last target. And it hit the last target by, let's see. When's that date right there? Okay, got close. So right about September the 2nd, it got up in here. All right. So this is why you got to be patient and wait for these moves. It takes a while for these moves to, you know, happen, but once it breaks there, you're good. That's why if you could catch the bottom or the top of the Y wave and it gets a breakout, you're set. But right here from that bottom, I just go from that candle high to this top right here. Right there. That's a 27% gain. You move the decimal over 1. That's 7,000. No. That's 700 and that's 780 pips right there. So that's a pretty good, you know, move right there from there to there. So this was a bust here, wasn't even a cut pattern. So let me see. And look here, let me show y'all N wave, a failed N wave. All right. Where is the tool? Right here. So from here to this point was an N wave. So we could have had another one. So right here, from this point to this point, right here, was a V wave. From this point to this point to back to this point right here was a V wave, as you see. So you got your I wave, V wave, N wave, and then it repeats itself. I wave, V wave, and then you could say N wave. It almost tricked everybody here because it made a double top and then moved down, but it was still considered an N wave. So you gotta watch these moves too, because here, as long as it holds there, then you got your bearish signal right here for price action. Boom, market tanked. And then it made an I wave. And then it made a V wave right after it finished that I wave. All right. So I need y'all to really get the wave system down so y'all could get that time theory down. So I'm gonna go back to Bitcoin real quick because we have our dates already marked up for Bitcoin. Let me go here real quick. Bitcoin's looking ready for its next move soon. So throwing on the cloud, let's go to the 4 hour. All right. So now we're using, just regular Ichimoku observation. All right. So let me see. Let me ask somebody. So Chanel, what are we looking like here? What's the cloud telling us right now on Bitcoin? At least on the 4 hour chart. What's it telling us to do?
Let's see. That it's about to get ready to go back down from the clouds. It crossed over, right?
Why you think that?
Because it crossed over, the blue and the purple.
The blue and the purple. You mean the cloud here?
Yes.
Okay. What else? So what else you think is giving you an idea should you be trading this right now?
No, but I think you should put a line, as a point.
Right. Okay. So why would you take a trade here? Because the reason why you don't want to take a trade here yet, only one thing, and I'll see you later, Bert. I hope you have a good one, brother. One thing you want to do.
All right, fam. Later.
I love you, man. God bless. So right here, Kijun is flat. If you ever see this line go flat, that means there's no trading opportunity on the 4 hour or whatever time frame that is. So if this is ever flat, don't trade the market. Now you do have a somewhat of a short opportunity here because it is at a resistance, but this is saying that the market is just ranging between this high and this low here. That's what the flat Kijun is saying. So you don't want to technically trade this on the 4 hour because there's no momentum. It needs to be like that, which means this fractal will be broken and price will start doing this. But we don't have that yet. And it would also look like this as well, but we don't have that. So you're not going to trade here exactly. What you're going to do at this point, you're going to want to wait or go to the smaller time frame to get a better option on your trade. So this, you're literally going from one chart because this is telling us no trade. Then you go into the next chart. This is telling us you have a potential trade because this is telling us that we're bearish here. You see that?
Yes.
So now this is where you have to be patient. This is where, this is why people don't know exactly when to trade Ichimoku because they say it contradicts itself. To an extent, I see what people are talking about, but after using it for a long time, when there's no trading opportunity on one time frame, it doesn't mean the same for the next. This is saying that we're bearish, but you have to remember we just had a bullish TK cross here. And you see that the cloud is doing what, Chanel? Because
It's getting bigger.
well, that too, but what is there momentum on the cloud or not?
No,
Why is there no momentum?
because it's a line.
Which one though?
The blue one. I'm saying the blue one is straight. So
On the cloud, this one?
no, go up one.
This one?
Yeah.
Correct. So if they're both flat, because they are both flat, A is flat and B is flat as well. So this is saying that the market's going to continue ranging and consolidating in here. Not saying that the market can't come back lower. This is why I say mark your levels, because it could definitely do that and then come back here and do this and then make its way above or bounce off the cloud, come below. So there's no opportunity just yet here.
So I'm
Right.
sorry.
Go ahead.
So am I wrong for waiting for it to cross over again?
No, you're not wrong at all.
Okay.
Because if it does cross over again, that's going to be a strong signal and it's going to be a bearish move to the downside, because a bearish TK cross underneath the cloud is considered a strong sell signal. Now, depending on where the Chiku span is at, that's going to say a lot too, because if the Chiku span is like somewhere in here and it happens, then yeah, this market's going to come down. But if it's inside here, then it's still 50-50. So right now it's just a waiting game. I'm not even going to call nothing yet. This is flat. This is flat. And you see that this cloud is starting to get weaker. It's starting to, move up higher. You see that? This is starting to move up. So if this remains flat, what's going to happen is this is going to happen. And then we'll get a cross here. And then we'll see a bullish cloud start to form. Well, it actually should be purple, but yeah, you get the picture.
Right, but that's when I think to go in.
Right.
I don't know.
Right. So right now there's no opportunity just yet. Not yet. This is why you got to mark it up and just be patient. Have it marked up on the hour and just set your alert and just keep monitoring it back and forth until you get the exact move that you need to get for you to make that trade. It's not ready yet, but it's close. Any questions so far, anybody?
No.
All right, good. All right, so let me see. All right, good. Nobody has questions. Perfect. So I guess everybody's understanding this. Let me do this. I'm going to do one more thing and then I'm going to close it here because this is pretty simple as far as, now let me show you this. Now this is where we get fun. All right? Because we already have our target set up for the wave theory, correct? So now that we're just waiting, everything is already done. We just need to wait for our official move, either the breakout and the bounce to the downside of this P wave or bounce off the cloud, or, we wait until we get a move to the upside because we already have our target ready. Now, our move to the upside is going to be a little bit different because, we don't have a P wave here. So what we can do, let's go to the 15 now and do this. So now this is how we could make our move to the upside based off the 15-minute chart. Let's say price does sustain and go higher. Let's say that does happen. It's very possible. So look what could happen here. Let me take this off real quick. Same thing. We're going to play the waves theory to the upside now. So from this point to this point to this C point right here. Now we have our targets in place for upward move. Actually, I need to move this out the way. Actually, no, that's fine. All All right, right there. So now we have our moves to the upside here. So you see this now? Let's say we do go up. All right. This will be our overall target by this date. So by the 25th, if we're moving to the upside, this is going to be our overall target. And then you might always want to take all your profit right here if you want to. Now, if it breaks here, then, you know, just keep it running. But this is where you will want to take your profit if we're moving to the upside. And then if we move to the downside, you got your targets down in here on how far the market could go. And if we're to put this in the consideration, this is probably going to be our target at this level, you know, moving to the downside. Depending on how fast the market moves, because we never know how fast the market's going to move, it's just to give you an idea of where the market's going to potentially move at that date. So you could, you know, you could make some moves by that time. You understand? So it's just a waiting game at this point. So I wouldn't rush, you know, as far as getting in a move just yet, because there's nothing, you know, completely secure here. But if you're going to trade this, the 15-minute time frame would be the best. Just monitor how the market moves at the breakouts here. Here it looks like it's getting, you know, the momentum starting to shift bullish. You see here how this is moving up, this is up. The signal needs to move higher. So here it's looking bullish here. And if we go to the 5 minute, this is probably the lowest I'll go. Yeah, that's as low as I'm gonna go. 5 minute is as low as I'll, you know, watch the market unless I'm just feeling, you know, risky. But right here, same thing. The market's, you know, starting to get bullish on the smaller time frame as well. So it's just a waiting game and just knowing and mapping out the market before it happens. That's how you use the time and observation and wave theory together. Just observe everything where the market's moving. Put scenarios about the end waves, in the wave theory, and the patterns in your head, and also check on the date and see when the time, you know, the potential move, how the move could potentially get there. All right.
So, quick question:
Yeah.
when you are trading on a 5-minute chart, do you trade every up, every down, every up, every down? Like, how would you do it on the 5-minute chart?
No, I would definitely not do that. That's suicidal.
I know, right?
No, I just find the overall move of the market or like the overall trend, and then I trade in that direction. Once I have the direction, then I just let it keep going. Because you got to remember on the smaller time frames, it's going to be a lot wavier. It's going to be a lot of noise, which is why most people don't trade the smaller time frames. Because if you're trading this move here, let me box this up. You see this move here? I'm going to box it up right here. You see this from this point to up here, right?
Yeah.
So I'm going to box this, and I'm going to only have it visible on the 1 hour chart and the 5 minute chart. So you can really see how ugly this and choppy this market could get. All right, so from here to here, let's go to the 5. So down here to up here, or up here, or somewhere up here, this is where the market, you know, look how choppy that looks. It's not saying that you can't trade it, because you definitely can, but you won't get that many points or make that much money. You're just gonna be scalping the market. But what's the thing about this market here? It's not ideal to, you know, trade as far as using the wave theory. Now you can use it, but look, you got this in wave here, then it consolidated, and then it made another in wave. So you could have really done this, honestly. You could have went from here to here and then got this point right there, because this right here equals that move, I'm pretty sure. Let me actually measure it just to make sure. From here to here. Okay, it gets pretty close to that point. But then you have resistance right here anyway. So yeah, you wouldn't have made it anyway unless it just broke out. So yeah, you could trade it like that. It's just it's not really ideal, if that makes sense. As far as that time frame, you can do
Yeah.
it. You can do it though. It's just good luck. That's all I'm gonna say. Another thing, if you're gonna trade that, let's see. So you had almost in wave. Actually, hold on. I messed that up. From this point to this point is up to here. Now, if you were trading like this from this top point, you could have traded it as a V wave. So here, this is your I wave here. Actually, no, hold on. Here to here's your I wave. So from the I wave, if it comes down, it's going to make a V wave. So it did make a correction here. So that's a V wave. Then now you could trade your N wave right here. See here, one here, and then boom, here's your target. Because if I do an N wave right there, here to here, see how it lines up? Now you could trade from this point to this point and get out with maximum you would make 72 pips if it came down here, but the market only moved about 52 and then barely moved 40 here. So yeah, it's gonna come down to your, you could do it. I'm not saying you can't. It's a lot of noise. It's gonna be it's gonna be more of a battle trading the wave theory. Hope that answers your question.
Yeah, it did. Cause when I first started, I was doing that. I'm like, am I doing this wrong? But as we go along, I realized that you trade certain trends, and that's how you win.
Right. Yeah, you only trade certain moves in the market. You don't want to trade everything. Everything's not everything's fine, but it's not optimal for every single trade. But hope that makes sense. As far as that and teaching it, I think this is pretty much the how you trade it. I'm pretty much done explaining it. There's not too much more to say here about it. So if you want to catch the recording, y'all could definitely catch the recording. Uh, definitely catch the move because it's not difficult. It's just requires a lot of patience. All right. So I'm gonna go ahead and stop recording. Y'all could definitely catch it. Let me do that real quick.